Welcome into Clear Picture Financial. Your host, Jason Noble. You can find Jason right here in Charleston, Chucktown, the Holy City, and it's always about retirement. You can find him at Prime Capital Investment Advisors, fiduciary advisor. Yes, he is. Also holds his FINRA Series 66 securities registration, certified financial planner, and retirement income certified professional with over 18 years in the financial arena, helping his clients get ready for their retirement. That's why we do this show, Jason. We do it to help people. We also give you an opportunity. If you have any questions about where you are in your planning process, maybe you haven't started, maybe you're in the middle of something and you feel like, gosh, I'm kind of married to this advisor or this advisory team. That is not the case. You can get a second opinion. So here's how we do it. We have 10 appointments each and every week, and we will open up those appointments during the course of this show, and they are complimentary. So stay tuned and grab one when you can. So you teased it. Fake news. I mean, you asked and we answered, so it's time to kind of get into this myth-buster role when it comes to finance and retirement. So let's go. I'm going to state it, and you tell me myth or fact, right? Okay, first one. Long-term care insurance can be expensive and is use it or lose it, but it's the only game in town. Is that a fact or is that more myth?
That's more of a myth, Morgan. And like long-term care insurance can actually be affordable. However, like circumstances can really change the cost of the policy, and there's a lot of variables to really consider when selecting a plan. The average long-term care insurance premium cost for a 55-year-old man in the United States is around $2,220 per year. However, like this is just one of the options that are out there, and there's pros and cons to that type of policy. There's other policies in there where you only pay for 10 years or 15 years, and it's the same premium every single year, so you don't have to worry about cost of living adjustments or actuarial tables changing and things of that nature. And the trade-off there is that if you were to pass away without needing the care, you actually get what's called the death benefit. But if you need the care, that money will pay out over a period of time at a certain dollar amount. So there's a lot of ways that this could be structured. How it's best way to get it structured is to make sure that it's being looked at in a holistic approach and making sure it fits into the overall financial plan, working from the end goal in mind backwards to what is the right approach to take. So this is a myth, and I'm glad that we were able to at least dispel this one.
Yeah, and think about this too, folks. I mean, your situation is going to be unique to you. You need to have a customized plan that takes into consideration all your different puzzle pieces. And guess what? Your neighbor, your buddy, your friend at work, their puzzle pieces are going to be completely different than yours. So they need a custom plan. You need a custom plan. We'll give you an opportunity to sit down with Jason and his team and talk about your situation here in just a little bit. So we're going fact or fiction. We're doing some myth busting today. We've already talked about long-term care insurance. All right. So this next one, the median retirement savings for baby boomers basically amounts to $202,000 a year in that household. So I should say $202,000 for the household. That's pretty exact. $202,000. Is that fact or fiction?
Well, that is a fact, and that was due to the study that was conducted by the Transamerica Center for Retirement Studies, and that was back in 2022. Baby boomers have a median of $202,000 saved for retirement. And while that may sound like a high number, that would only really amount to about $8,000 per year, or around $650 per month if you're using the 4% rule. So, I mean, we do have what we call a baby boomer dilemma that's going on. And, if you're listening and you're in that group, this is where it's important for you to reach out to see what are some of the things that you could be doing to improve your probability of success and reach your financial goals.
It's all about having a plan and knowing exactly what you have. And when you sit down and you have these conversations, you map this out, you're going to find out one of two things. One, you're doing fine. You've got enough. You're moving towards retirement. Maybe you tweak it here, tweak it there. Or you find out the other thing, Jason, and that is you got a lot of work to do. And that takes planning. And that's why the earlier you get in to the planning, this mode, the better it's going to be for you as you move to and through retirement. So myth busting, we continue on. Here's the next one. All debt is bad. Fact, fiction? Is it a myth? What is it?
That is a myth-ish. It's a myth. Well, debt is the greatest killer of wealth. Okay, so I want to start by saying that, but you need to know what is right for you and what is good debt and what is bad debt and how they could work for you or even against you. And so when you look at debt, what you're looking at doing is leverage. But are you leveraging assets like hard assets, or are you leveraging other things? And I've seen people go into high interest rate credit card debt. Well, obviously that is awful, right? That's bad debt.
Yeah.
But think about a mortgage. That's something that most people have if they own a home, unless you pay it all off in cash. Well, you take a look at, and there's a lot of other people on the radio show, on their radio shows that are national, and I'm not throwing any shade at them, but they're like, all debt is bad debt. And they did not change their tune when people could refinance their mortgage for 2.8% back in 2020. And I was able to, work and walk through that with my clients and make sure that we were putting themselves in a good situation by taking on a lower interest rate mortgage. And like when you start looking at home evaluations of where they are today, oh my gosh, and like now they have a lot of access in their home equity. Mm-hmm. Do we or do we not tap into that is really dependent on their own personal financial goals. So to put a blanket statement like all debt is bad debt, I would just say there's a lot of bad debt that's out there, but there's a lot of really good debt as well. And that's going to be factored into your overall clear picture analysis with our approach that we take.
So listen, we have the 10 positions on the calendar with Jason Noble and his team at Prime Capital Investment Advisors. You can call and book at any time, 843-743-2926, or text Noble, N-O-B-L-E, to 600-700. Again, 843-743-2926, or text Noble, N-O-B-L-E, to 600-700. So just to recap, myth busting. The first one, long-term care insurance can be expensive and use it or lose it basically is the only game in town. That is a myth. All right. The median retirement savings for baby boomers amounts to about $202,000 per household. That is a fact. And then all debt is bad. That was kind of in the middle. So we've had three categories. That was myth-ish. So here is our next one. Are you ready? Here it goes. Never, ever, ever, ever discuss financial issues with significant others, friends, family, and coworkers.
Well, that's a myth, and I want to be very clear when I go into this. The more you can include your spouse and even your family, the better I would go. Now, speaking with friends, family, or friends or coworkers, let's say, let me put it that way. Take what they say with. I'm not going to say with a grain of salt, but take what they say and do your own due diligence. Speak with your own professional to make sure that's right for you. It could be right for them, but maybe not right for you. And when I'm talking like discussing financial issues with your significant other, I do have clients that look at their finances separate, and it creates strain as they progress in their relationship. But having that open transparency and that communication. Not to say there still may not be financial strain, but they're able to work together as a partnership in order to tackle whatever issue that comes, right? So I think that's so important. But then when I talk about having discussions with family, when I'm looking at that to make that more of a fact is what is your estate plan and what does that look like, and having that family legacy wealth discussion. Because you see so many times that money goes to the next generation and it's gone within a few years. So, but having that conversation and preparing well in advance is not a fun conversation, but it's an essential conversation. It's something that we facilitate with our clear picture approach.
I'll tell you, it's very interesting to go over what kind of is out there and has been kind of in the ether. It's been floating around about retirement planning, and we're myth busting. We're doing facts or fiction. Last one we have time for, and this is it. And this is one that I hear quite a bit. You tell me if it is true or false, fact or fiction. 60% of Americans, Jason, believe that Social Security benefits will make up the majority of their retirement savings.
That is a fact. According to a survey that was conducted by Statista, it was that 60% of Americans believe this. That's scary. Okay, so because I'm saying it's a fact, it's because 60% Americans believe Social Security benefits will make up the majority. That may not be true, and it's something that is so important to make sure you have your clear picture to what your finances look like as you go into claiming Social Security.
Well, and the other part of it, too, when we talk about it, it seems like every time Social Security comes up, it is going to be a piece of that puzzle that we talk about when it comes to your retirement plan. But I mean, it's not going to be half the puzzle. It's not going to be 3/4 of the puzzle. It's going to be a piece of your puzzle, and you have to have supplements in there. And that's why, having that plan and talking about it with someone like a Jason Noble, a fiduciary, and sit down and kind of map things out. I mean, that's the ease of mind we talk about. All right, we've got 10 spots on your calendar, Jason. You open these up to help out our radio listeners. And again, they're no cost, no obligation, no pressure. Walk us through what's going to happen at these 10 appointments.
Well, listeners, thank you so much for taking time to listen. But this is where I want you to take that next step and act, especially with all the uncertainty in the markets, the economy, and the world. Right now, it's just so important to be proactive and not reactive. Take that first step by calling in and speaking to one of our specialists who will schedule your custom core values meeting with me. And this is where we get to know your story, the story of your money, any concerns that you have right now. This analysis will include a fee report with risk assessment to help you recognize unnecessary losses in your portfolio and see if by simply protecting your retirement investments, you could experience dramatic growth potential. We'll also perform a tax analysis to see if we could possibly reduce your taxes and increase your cash flow. We will also develop a customized income plan utilizing proven strategies that can strengthen your retirement income and take that worry out of living in retirement. So for the next 10 callers, that's a comprehensive financial review that we're providing complimentary with no obligation from an advisor that was just recently recognized by Advisor Hub as top 5 in the country, #1 in our hearts, #1 in South Carolina.